This is the Texas Land Guys podcast, hosted by brothers Tim Dosch and Tom Dosch. With their partners David Marshall and Tripp Rich, they have built DMRE, the leading land brokerage in Texas. With decades of experience brokering deals between landowners and real estate developers, they take you inside the deals that move the market.
All right. Well, welcome to the podcast today. Excited that this is our first episode where we've got both David and Tripp joining. Tripp's here in Dallas with me today. David's in Houston with Tim. We just had our episode last week, our second episode to launch, where we talked about 2024 and kind of gave a recap and really went into even beyond 2024, what we saw since interest rates spiked and the market corrected. Today, what we're going to be talking about, and the reason we have both Tripp and David joining, is we're going to be talking about 2025 and what we're excited about. We believe we're at the beginning of another real estate cycle in our markets where there's going to be just a lot of positive activity. So what we're looking forward to in 2025 and some predictions, market by market, asset type by asset type. And so before we just dive into that, guys, welcome to the podcast.
Yeah, thanks Tom.
Guys.
Yeah. Excited to be here. Thanks for having us.
Let's start with some sound bites that maybe our clients have been talking about. I think every year when we start wrapping up a year, we start meeting with clients talking about their strategy and their plan for the next year. And then January ends up being just jammed full of meetings. I think this week alone, there's probably, I think the guy said 25 developer meetings happening in Dallas this week. Just kind of incredible to think about just in our office this 1 week. And that's what the month of January pretty much looks like for us, is meeting with developers. And so through those meetings, there's a lot of sound bites, a lot of just topics that are getting thrown around. There's a lot that's changed just with the election, with the new administration coming, with interest rates, finally seeing the Fed cut rates late last year, but still seeing the 10-year kind of creep up and run the last 60 days or so. Rental rates down. I mean, there's so many different topics to hit. I think there's a convergence of data points that are going to make 2025 just an interesting year. So where do you guys want to start?
I would say it's hard to not start with the presidential election. I know that was a couple months ago now, but I think that has had a profound impact on people's outlook, for 2025 and really beyond. I think, Trump being elected, there's a definitely a belief, I think a widespread belief to our clients that he's very pro-business. We're going to see some, deregulation. I know there's going to be some things we'll talk about. There's concerns too with what he might do with tariffs and some impacts that we could see from that. But I think, from my conversations with a lot of sellers, a lot of developers, just an incredible kind of bullish mood that we're all feeling because of Trump, coming into office here, I guess in a week or so. And so I think it's hard to not start with that. It's kind of the landscape that we see ourselves in now in early 2025.
Yeah, when we release this episode, I think he will officially be in office. So it seems like it's been a while since the election, but it's also now come pretty quick that we're seeing that change. I think you're right, Tim. That's a big one. I think post the election, there was an immediate shift in November where suddenly it was almost like we were already in 2025. I mean, Tripp, were you experiencing that in Austin?
I was experiencing a lot of distraction from clients and even landowners. We were doing a couple of BOVs a week. We're constantly meeting and talking with developer clients, and questions we were getting asked 100% of the time is the impact of the election. Who's going to win? How's it going to impact us? Are people pausing on doing deals because this is still looming? And we certainly felt that in Austin. A lot of decisions were being held until the election was done and over with, regardless of who won. And so I'd be curious to hear your guys' thoughts on if it was similar or different in Dallas and Houston.
Yeah, I think it was similar. It's interesting because a lot of decisions sometimes seem to be a little bit emotional. Yeah. How people feel. I feel like that with the stock market a lot. But even just with the election, you're right. There was a lot of, we're not really going to make a decision on this property until after the election. And, and then, the election happened and you kind of wonder how much is that really going to change the outlook on some of these specific land sites in Dallas, regardless of who gets elected. But, when the election did happen, there definitely was just a lot more optimism. Now, that doesn't necessarily mean that all the fundamentals in these markets look great today. We were talking about that, yesterday. Just if you're a developer trying to underwrite a deal to today's economics, it's really difficult.
Yeah.
I think the big thing, with the presidential election, leading up to it, no market likes uncertainty, and that immediately freezes people up. People at the pause button, they want to wait to see what the outcome is, whatever the situation may be. And so uncertainty in the market is as a broker, something we dislike probably the most. I think, like Tim alluded to earlier, the Trump administration, everybody thinks it'll be a very business friendly, next 4 years. And I think that is the case, but it was definitely nice for the presidential election to happen. And now it's behind us because that uncertainty is gone. Now everybody knows who's going to be, in the White House, who the administration is going to be. And, I think that in combination with also what we saw, in the second half of this year, more kind of starting in the fall, is interest rates to pull down. And I think that in accordance with, the Trump administration, I think to Tom, I think you said it when you opened up, it's going to be a bullish next couple of years in the real estate market.
Mm-hmm.
Yeah, and I think Tim, I'm interested in your view on maybe tariffs, because that's one of the elements that you mentioned that clients have brought up as a concern. We've seen construction prices come way down, but there's a concern with these tariffs that we could maybe see prices go back up.
Yeah, I think it's interesting because in our career, construction prices never really go down. They sometimes plateau and then they don't go up as fast, but they typically go up very quickly. And they're probably a more significant impact than land prices because such a big part of the total capitalization is actually construction prices. So we've actually seen construction pricing decrease, in the last 18 months because there's been such a drop in development over that time period in starts. And so now you're, like you said, that there's this fear of, Trump's talking about tariffs, he's talking about trade wars with these different countries, and that's going to just spike construction prices. My personal view on that is I think that Trump is a very good negotiator. I think he's a master at creating this kind of, hype in the media, everybody talking about things to use as leverage in negotiation. So, we didn't see a lot of tariffs in his first term. Now that could be different. This is, it's been years now since his first term. It's going to be his last term. So he doesn't have to answer to the voters, in 4 years. So maybe he will be a little bit more aggressive with it, but I think he's probably not. I think he's going to use this to kind of try and negotiate some really good trade deals with other countries. And I don't think we'll see a ton of tariffs that'll materially impact construction prices. I think that the impact is going to be, probably a lot more construction starting in Texas over the next 12 to 18 months. And so I think we see a kind of a really amazing opportunity right now for developers to start deals if they're ready, where there's some very good construction pricing, especially for stick-built product. But then as we go forward, probably mid-year, get into quarter three and, fourth quarter, starting to see those prices come back up. And maybe in 26 and 27, seeing some record construction prices just because of the activity.
Yeah, no, I think that's a great point, Tim. And it seems like the clients that have brought up tariffs as a concern, it probably hasn't been a widely held belief that that's really going to have a significant impact. It's more of just could be out there. I think what we're definitely seeing is we are seeing that we're in this moment in time where prices have come down. There's a project we're working on here in DFW, and just the savings on the construction plans, there's about $10 million. And so that's in that scenario more than the value of the land. And that's just the savings, from 12 months ago. So that I think will be huge. A big part of that is development has slowed down quite a bit the last 2 years. I mean, the numbers from what we would have posted are way off because of the capital markets and how difficult it's been to get a deal built. And that has a lot to do with rates. And so, we saw the Fed cut rates, but then we've also seen the 10-year continue to increase. And so I think what's interesting about that is if you were looking at the 10-year kind of late last year, it looked like a lot of these acquisitions deals, these existing deals were probably going to trade early this year. But with the 10-year increasing, like it has, what I'm hearing from clients is a lot of those deals will probably hold for now. And so you may not see some of that capital recycle as quickly as we thought it would. And so I think that actually will make development, especially suburban development, more interesting. And so you may see more of a focus on development versus acquisitions.
Yeah, that's a major headwind. I think it's interesting, probably November, December of 24, there's a lot of predictions of just a significant Fed rate cut over all of 25, maybe 150 basis point cut. Some people are saying a 200 basis point cut, which would just be incredible for the market. I think we'd just see a very frothy market if that happens. Like you're saying, Tom, I think in recent weeks, there's a little bit more of a kind of moderating of that view and saying maybe we're going to see some rate cuts. Maybe it's 25 to 50 basis points this year, potentially maybe even a slight raise, 25 basis points or holding steady, but probably not a very big move in rates like we thought in the Fed rate, which is going to have an impact. I think what we could talk about, though, is it may not have as much of a negative impact as you would think, because we're talking about the last 2 years, we've just been devastated by rates rising and repricing the market. So you think, man, if rates aren't going to drop, wouldn't that be more of the same that we saw in 23 and 24? I think we could talk about why that's probably not going to be the same. I don't know what thoughts you guys have on that.
I think one of the big things is rates is obviously important because that's a cost of borrowing money and building. So, but to the point Tom made, if these acquisitions, if they're not the improved properties aren't selling, and these banks aren't able to recycle the money, then it's going to be difficult, still remain difficult to go out and get a construction loan, because I think a lot of those developers depend on these banks, and the banks do too, selling properties and money getting recycled back so they can lend on it again. So that does, if it jams up the investment sales business, it'll slow down the construction business as well.
One thing that's good that I think we've seen around lending has been probably the beginning of last year. At the beginning of 24, it was really hard to get a loan. And before that, that was the big challenge. And then it kind of shifted to be more of an equity problem. And more clients, it was clients saying like, we're one of 5 clients that can get a loan right now. That was what we were hearing in 2023. And then, now we're seeing a lot of our clients be able to get loans. I think there's just been a repricing in the market. So it just took some time. All these deals that, were in the pipeline in early 2022, not only the land price was really high, but the cost of capital that they were utilizing in their underwriting was so low. And their leverage, it was high leverage, it was low cost of capital, and it's just taken a lot of time for that to kind of work through. And I think we're seeing that finally work through. And so, Tim, to your point, I think you're right. Even if rates plateau, even if they ticked up a little bit, or if they don't go down as much as it's expected, I think the population growth that we're experiencing and the fact that there's just been a stranglehold on development for the last 2 years with how difficult it's been, it's just kind of leading to this place where I think deals will be able to get done. It's still gonna be difficult. It's not gonna be easy, but we're gonna see a lot more deals get done, especially from the quality sponsors that can take advantage of construction pricing and where that's coming in.
And Tom, you hit the nail on the head with the population growth. Texas, I think we'll continue to see the kind of population growth we've seen over the last 14 years. And what that's done, it's created a housing shortage here in Texas. And so I think all that, these equity groups and the lenders, they look at, these trends and these where the population is going. And those are the areas, and job growth as well. Those are the areas where they want to be placing money and lending money. And so that bodes very positive for, deals here in the state of Texas.
I think one more point to hit, just a comment that I know we've heard a lot and we're seeing, because we track supply so closely as a company, specifically supply of multifamily properties. There's really a big expectation that deliveries are going to be way down just because of the permits and because of the number of projects that have gone to the sidelines. And so, yes, deliveries have been way up when you look at the last 12 months in our markets, but there's almost like a cliff type scenario where we're going to get to a point probably later this year, early 26, depending on the market, where there's really not going to be a lot of deliveries. And so that's a big opportunity because, David, what you just said with population growth and jobs, we have to have a certain number of deliveries. And it's a pretty big number depending on the market just to keep the status quo.
Yeah, I think we've seen that in Houston. It's probably been maybe a decade since we've had this kind of a supply gap that we're seeing in Houston. So you have really, and speaking of multifamily specifically, great rent growth in Houston. and then a supply gap for sure in the infill market. There's no new infill supply or very little. And then there's some suburban supply, but we're still down significantly. I know that Dallas has actually had a pretty good run, but you guys are still way down from where you would have been had you not had this the last 2 years. And then Tripp, I don't know what you'd say about Austin. I know Austin seems like you guys were pretty resilient in 23 and 24, despite the impact of rates going up. Austin has just been such an in-demand market for the institutions that you guys still have some traction on deals, right?
Yeah, I mean, we were still able to get a lot of deals done, which was a blessing for sure. Austin, I will say that Austin was the poster child for supply when we're speaking directly on multifamily development. Right now we've got 25,000 units that are in various stages of lease up. Historically, Austin delivers, around 13 to 15,000 units a year. So we're seeing some concessions. I think we're at 3 months free right now, which is, not common in recent years for Austin. And then we've got another 14,000 units that are under construction, and I think another 39,000 that are proposed. The silver lining in all of that is that we're seeing lease up activity be really strong. The month of November and December are typically pretty slow in multifamily lease up. And November and December, we saw a ton of leases get done. They're not at the greatest rates, but we're seeing that supply getting eaten up pretty quickly. And so I think that we'll come out of it stronger. It'll just be a little bit later than, say, like Dallas and Houston, which I think will be pretty hot this year.
Well, why don't we kind of move into maybe more of our specific markets and different use types and just what we're seeing and kind of what we're predicting to see in 2025. Tim, do you and David want to start maybe by talking about industrial in Houston and what you're expecting to see this next year or this year?
Sure. Yeah. Do you want to take that, David?
Yeah, sure. So, I think industrial, the absorption here in Houston's been, off the charts. And, right now, I think one big difference that we're going to see here in the 25 and into 26 is, the big bomber type developments that really dropped off over the last couple of years. And, we think that's going to come back here in 25. Like I mentioned, the fundamentals on in the industrial sector here in Houston, are probably the best across the state. And we've absorbed the supply that we've built, and it's encouraging that, that should continue to happen. The absorption rates have been very, very strong here in Houston, and I think that will continue.
I think to add to that, pricing, I think we're seeing a major shift in pricing. I'd say maybe at least a 30% increase in industrial land pricing, but probably more like a 50% or a doubling of industrial land pricing. Getting back to kind of that 21, 22 time frame where we really saw pricing jump, and there was just a tremendous amount of industrial activity, a lot of capital behind industrial. In 23 and 24, we saw that really drop off, and we saw pricing kind of start to come back down, not as many transactions. We're already seeing now in several deals we're working on just a pretty significant move in upward momentum of pricing across these sites, even within a couple week period. Developers trying to offer a buck or two a foot more than each other and sort of kind of compete for sites and push each other. And we're hearing now from our clients, they're getting institutional capital on their deals. There's a lot of interest in doing deals in Houston again. So I think it's going to be a very exciting year for Houston industrial.
Yeah, that's interesting because I think what you shared, Dave, is really similar to what we're expecting to see here in Dallas. What we really saw probably the last 12 to 18 months was developers pulling in, industrial developers that historically would probably only look at development opportunities that were 15, 20 acres plus, more institutional size deals. They were willing to skinny up to sites that were 10 acres, 6 acres. We even saw some developers do some 4-acre deals, just a need to do deals. And these are in really infill, around the airport, like hard to get into areas. But smaller projects that those developers, they needed to do deals, but that's not really the ideal situation. And so what we've already started to see as we kick off 25, several developers are saying, okay, we're ready to kind of go back out. So from a geographic standpoint, we want to go back into some of these more growth areas in DFW. So, Denton, McKinney, even down south in Fort Worth. And we're looking at some larger tracks that could be, bomber type tracks. That almost completely went away the last 2 years just because capital and because of the supply in the market. But industrial supply in a lot of cases has really been eaten up, which is good here in Dallas. And so I think we expect to see something really similar, a geographic shift and then just bigger deals. And so I would say that's similar for us. I don't know, Tripp, if you feel like Austin, San Antonio is a little bit different or...
Yeah, it is. It's been really interesting to watch. Obviously 21 and 22, we had got a ton of the big bomber projects done on really big land sites. And since then, 23 and 24, it slowed down a ton. There's just so many sites and so many got so aggressive with the developers that they were buying sites, that weren't fully entitled and that didn't have utilities fully figured out. It was just kind of a land grab, for that 24-month window. And a lot of those big projects are still sitting there undeveloped today. So I think in regards to 25, I think we'll see a lot of those bigger projects get out of the ground. There's still a ton of supply. Austin historically hasn't been a big industrial market if you look over the past 10, 20 years. It really exploded in the past 5 or 6. And so I think that we'll see leasing activity slow down. We'll need a lot of these bigger projects to get eaten up. What is interesting though is we've similarly had a really big shift to urban infill or very well located smaller industrial tracts. We're chasing a lot of, call it 5 to 15 acre tracts that are, right on I-35 or really well located sites in the suburbs that are smaller. And I think, in the conversations I've had, I think that's due to the risk involved. They're not as big of projects. You can get out of the ground and develop pretty quickly. And the tenant demand for smaller projects that's broken out for that shallow bay product is pretty high in Austin. There's a very little amount of supply of those smaller projects that are well located. So I think we'll continue to see that in 25, and we'll watch the lease up on these bigger projects take place, and probably won't see the big projects come back until 26, 27 for Austin and San Antonio.
I think what's interesting about Austin and San Antonio, maybe you can speak to this a little bit, Tripp. I think that the whole kind of Central Texas market is completely changing. And so people try and look back at historicals for industrial and say, well, we I don't know what the numbers are, but we would add this much space every year. And then now we have this big kind of step up in what we're adding. But I think it's just a completely different market. I think the last couple of years, Austin has become like the new San Francisco for the country. There's so much investment. There's so much hype, everything from Elon Musk and all these different podcasts being headquartered in Austin, all the celebrities going there, a lot of businesses moving there. It's a technology base now. I think, the onshoring that's happened kind of since COVID and, the proximity of Austin to Mexico and being able to move product, from Mexico up into the kind of the heart of the United States. It just seems like, you can't really look to the past and try and say, as a barometer of, is Austin overbuilt? Is it not overbuilt? I mean, I think your point's well taken that there is a lot of supply and that it has to be absorbed. But I think it will probably, my guess is we're going to see a lot quicker absorption than we think and a lot more development happening in the coming years in Austin and in San Antonio, just because I think that market has fundamentally changed and it's in a new era.
Yeah, no, it's interesting you bring that up because it's, I'd say another prediction for 25, and something that I'm seeing even today is that it's very submarket focused. And so some of the smaller projects, even some stuff that I've invested in with some clients along 35 corridor is, we're pre-leasing some of these buildings before they even deliver, which is pretty unique, at least in Austin. Whereas some other submarkets on deals that we had deliver, in the past 3 to 6 months that are well-located sites, aren't getting as much love. So I think it's going to be a lot more of where you're building. And I think a lot of that, Tim, has to do with, where these suppliers want to be and what projects, that have been announced in Austin in the past 2 to 4 years are just now coming to fruition or still under construction. I mean, you think about Tesla and Samsung alone, and the suppliers that are feeding into those are only going to grow as, Samsung's still well under construction. Tesla even has a piece that's still under construction. And as Elon brings, the Boring Company and some other of his companies to Austin, hopefully more, I think those suppliers are going to continue to need space, which kind of makes sense for a lot of this smaller shallow bay products. So it's pretty exciting.
I'm jealous. Tripp's the only one that can say he's done a deal with Elon. So
That's right.
hopefully Elon wants to give Dallas some love too. But I was going to say it's a good transition into single family. We've already hit population growth. There's such a need for residential housing. So we'll hit multi after single family. But single family, it's been so hot. It's been the hottest probably asset type since rates went up. So I think there could be a tendency to assume that there could be a slowdown in that, but I don't think any of us are really projecting a slowdown on the single family side. I know for Dallas, there's probably even more of a shift to finished lots as a focus. We're seeing that from a lot of builders. Now there's only so many finished lots to go around, and these public builders need so many lot deliveries that you're definitely still seeing, groups to, start in-house development teams to be able to go chase raw land sites as well. But, to kind of get specific on Dallas, I think what I expect to see is a continuation of just demand for finished lots resulting in some really high prices. We closed a deal late last year in Dallas that was the highest finished lot price closed in that submarket ever. And I think we're going to see more of that, because I think if you have a site that's well located for detached single family, and I think you're going to see such an appetite from builders to go get starts this next year that will continue to see really, really strong activity. So I don't know, Tripp, if you see Austin as the same or what you think in Central Texas.
Yeah. I mean, over the past, 3-4 years, single family obviously exploded in the Texas Triangle, and specifically in Austin, San Antonio. San Antonio a little bit later to the party, but I think we're one of the fastest, or biggest single family markets as of last year, which has been incredible and has given us an opportunity to be successful and do deals. And 23 and 24, we had a big shift to working with a lot of the single family developers. Yeah, and in regards to 25, I think it's going to be pretty interesting. We've had some zoning changes specifically in Austin that allow for more of a townhome product, which I know is pretty popular, very popular in Houston, and also very popular in Dallas. And ironically, is how small Austin is and how dense it is. You'd think they would have done that a long time ago. And so I'm having conversations as late of yesterday afternoon with developer clients that really want to be aggressive on these townhome plays. So I think we'll continue to see a lot of infill townhome development growth in Austin. San Antonio, we've already had a few meetings this week and had a bunch last week on the single family side. And basically they just said, find us a deal anywhere and it'll make sense. So San Antonio, we're super bullish on the single family market there. Austin, it seems like there's a lot of guys that already have pretty big positions. So I think it's going to be a combination of, separating yourself from the market. And that could be with what specifically you're developing and where. We've got more than a handful of the big builders that have, 5,000 to 8,000 units already under control and or closed on. So it'll probably be a little bit of a slowdown on the sales side. But at the same time, if you go look at 6, 7, and 8 for years and you look at supply, it kind of falls off a cliff. And so these guys, they want to do deals, they want to keep their jobs. And so I think we're going to continue to see those guys be aggressive. We got a call yesterday from a group, publicly traded builder that's got $100 million they need to spend this year in Austin, San Antonio. So we're pretty excited about 25. And I think we'll continue to see those guys be pretty aggressive.
That's good. And I know Houston's bullish on single family.
Yeah, I was going to say, we're starting out the year with some pretty big closings on the single family side. We'll probably close somewhere in the 2,500 to 3,000 acre range of sites in the first quarter. So that's some kind of 50 to 200 acre tracts. They're kind of mid-sized builder tracts, but it's also some big, master planned kind of massive communities that we're closing that have been in the works for a while. So I agree with you guys. I think we're going to see Houston continue to be very bullish on the single family side. I think the townhome comment's interesting. We're seeing that on what we would call infill suburban sites, seeing that product kind of start to fill in. We haven't seen it as strong in the true urban infill market as it was maybe 10 years ago, because there was a time, what you guys probably remember, where there was a lot of kind of urban infill development. And we're seeing some of that, but that just hasn't been as strong as kind of this suburban infill, well-located sites. We're seeing a higher density for sale product being built. So I don't know what you'd add to that, David. I think one more thing I would add is that we are seeing a big shift with builders. Last year we were seeing them just go take down sites and kind of figure it out from a development standpoint. This year we're seeing them look to land bankers and to lot developers to try and step in and be in between the land seller and actually the finished lots that they want to eventually purchase from that land banker or that lot developer. And so we actually had a meeting this week with one of our public builders, and we have I'd say about a dozen sites that we were talking to them about. And I would say 80% of those, they're going to get those deals done, but they're bringing land bankers on to help them transact the site, and they will buy the lots from that land banker who's going to develop lots on the site. So I don't know what you'd add. We could talk about single family probably the whole podcast. But.
Yeah, I mean, like you and Tom both mentioned, that's going to be the biggest change and shift from last year to this year on the single family side is, these builders, land bank or having, using land bankers to buy tracts versus, buying them and putting them on their balance sheet, on their own balance sheet. It's hard not to, think single family is going to be bullish this year. We keep hitting on it, the population, job growth. I mean, Texas alone added 500,000 residents last year in 2024. And I mean, it's enough to where we've talked about it a couple times already. There's a housing shortage of over 300. I think the number was 320,000. And so enough of a shortage where there's going to be there's some talks of state legislative reform, loosening, zoning laws, loosening, density restrictions, things like that to allow these, builders to build more homes because it's become a problem here in the state that, I think they're looking into the future, it not slowing down much, the population growth that we're experiencing here in the state of Texas. So I think, with all that combined, I think single family looks, in my opinion, and it sounds like the three of y'all's opinion as well, is going to be very, very strong for the foreseeable future.
And one thing that surprised our multifamily clients is we're seeing, and I'm sure you guys are seeing this in Central Texas and Dallas, we're seeing single family groups compete with multifamily developers on these infill suburban sites from a pricing standpoint. And in some cases, actually outbid and pay higher pricing than the multifamily guys can pay, which is kind of shocking. I never would have thought that a couple of years ago because multifamily guys could always pay more, maybe 30% more, 40% more. But we've really seen a big move on pricing from the single family developers and home builders that's kind of changed the game.
Yeah, well, you guys bring up a pretty good point. I would be curious to hear what y'all's experience has been with like horizontal investors and horizontal developers in your respective markets. I know for us, we've seen a huge demand in that. A lot of the deals we're going to close this year are with horizontal developers. And, most of these public builders don't want the land on their books. They're meeting Wall Street's needs or requirements. And so, I think there'll be, 5 or 6 plus transactions that we will close on with an investor or horizontal developer this year and then turn around and sell to the big guys. So I'd be curious to hear about y'all's experience with that, or if you're having that much activity in y'all's markets with the horizontal guys, because we've seen a huge uptick in that.
I think we definitely are. And I think it's a lot of what David just said, just because these builders don't want to hold land on their balance sheet. It's creating a really strong market if you're willing to go out and buy a land tract and develop it. There's some incredible pricing right now on finished lots. And so I think, we're working quite a bit with land developers here, and some builders are doing that too, and there's some groups across our state that they kind of do everything. Everything from horizontal to they have, a vertical team that goes and builds homes. But I think there's a lot of interesting opportunity there for sure.
Yeah.
Why don't you speak, Tripp, to the multifamily market and kind of kick us off from that asset type and what you expect to see in Austin, San Antonio?
Certainly. Prediction-wise, I think we're going to continue to see construction pricing decline in 2025. We've already seen a significant decline. Our starts in 24 fell off a cliff. I think we got maybe 15 deals broke ground in total in 2024, which is next to nothing. So I think we'll continue to see the construction pricing drop. It's a herd mentality with equity. These guys can go and get debt, but equity today, the way that they're making these guys underwrite, specifically in Austin being the number one oversupplied market, they're all pretty nervous. And so I think that the elite multifamily developers will start to tie up, some of the best sites at pretty attractive pricing and construction pricing today throughout the rest of 25. And I think the moment that equity starts to hop back on board from a macro level, some of the big institutions, I think it's going to be lit on fire. Prediction will probably be, end of 25 for Austin and San Antonio. Rents are down more than 20%, and our vacancies at 20%. And so it's gonna take at least a year for that to come back up. But we're playing in a futures game. Development is not an overnight play. We're looking at everything 3 to even 5 years out, specifically in Austin with entitlements and utilities and everything. So I think it'll be late 25 when things heat back up. And then I think 26 and 7 are going to be some pretty incredible years for development opportunity for multifamily.
Yeah, it's interesting kind of going maybe in order of, and not to steal the thunder of the Houston guys, but just how aggressive we think multifamily might be in 25. I think Dallas, we're really excited that we're getting to a point where we've had that stranglehold on supply, and we've had deliveries way down here too. It's been a sought after strong market, but it's been so hard to make deals work just because of where the capital markets have been. And so we've been able to get deals done, but it's been challenging, and contract timing has really extended on deals. I mean, it's for a while now, it's been, if you did a 9-month transaction, that was fast, and a lot of deals are taking longer than a year. We did see a window in time when pricing kind of started to come down on multifamily. But I would say now entering into 25, I mean, we are just getting absolutely buried with multifamily developers coming to us and saying, we need deals. I need 3 deals this year. I need 5 deals this year. I mean, I think last week alone, we had 5 different multifamily quality developers say they need 3 to 5 deals this year. And then there's more this week. So I think we're going to see a huge spike in activity. I think the challenge for us in Dallas will just be, we've kind of had continual activity this whole time. It hasn't completely shut off on the land side. And so it's not going to be that easy to go find these 3 to 5 sites per developer that really work. I think in a lot of cases, some of these developers might be looking for maybe not totally a unicorn, but just sites that aren't really there anymore, just because we're in such a big market in Dallas, Fort Worth, with so much activity and so many developers that there's no just no-brainer multifamily sites just sitting around. It's really, we study it all the time. It's really going to be going and either doing the deals that are out there that developers have probably known about for the last year or two because they've just been sitting there, or it's going to be you're going to have to go take some time to zone. And I think the real opportunity is going to be trying to execute on deals in 25 because of the supply-demand story and because of construction pricing. And so my biggest prediction, I think, for this year is you're going to see contract timing in Dallas come down pretty significantly. I think we're going to start seeing 6-month transactions again, start to finish on the multifamily side. And we saw, that one-off here and there the last 2 years, but back in 2022, any zone site was like a 60-30. I mean, deals were so fast. And I think we may not get all the way back to 60-30, but we're going to get back to deals closing before permits and closing a lot sooner in Dallas.
Yeah, it's interesting to bring that up. Austin, we expected the land market to alter drastically on multifamily land pricing, and we really didn't. We probably saw 15 to 20% drop, which really didn't move the needle for these developers. But we did see time extend significantly, whereas deals were closing in as quickly as 90 days up to 8 or 9 months. We've seen a shift to development timelines moving back to closing with a site development permit and a partner in hand, which is 12 to 24 months, depending on where you're developing in Austin and its suburbs. And I think we'll continue to see, longer contract times until, lease up happens and we can start underwriting rent growth again. So that's an interesting piece in Dallas. I'd be interested to hear where you guys stand on multifamily development predictions for 25 for Houston.
I was going to say, Tripp, it's interesting just talking about when you look at the multifamily land business in a bad cycle or a down cycle versus a really hot cycle. I think contract timing is probably one of the biggest changes that you see, because the reality is we don't really see pricing go down that much, which might be kind of surprising. I'm sure you guys had the last 2 years like we did, especially on some of these infill sites. Developers would say that site is not worth anything, or it's worth 50% of what it was.
Oh yeah,
because that's what it underwrites to. It doesn't underwrite any higher than that. None of those sellers will sell at that kind of discount. They just hold the site. Most sellers are able to hold and wait if they have a good site. But the change that you see is this extended contract timing. So it's 12 months, 15 months, these long contract timeframes. And then when the market starts to get better, you see developers getting really aggressive. They know they can get deals capitalized. In Houston, the timeline to put a shovel in the ground is pretty quick. It's probably a year, maybe a little bit less. And so we start seeing these quicker deals. But I think from a prediction standpoint, I think the big change that we're going to see is developers coming back to the urban infill market and doing deals. I don't think it's going to be this huge wave. I don't think we're going to see super high pricing. But in my career, I've been doing this in Houston now 20 years. It has been as quiet in the urban infill market as it was in the Great Recession. I mean, there's nothing that's been happening in 23 and 24. It's been just dead. And typically that's a very active market for us. Areas like the Heights, Greenway Plaza, Midtown, there's this big kind of urban infill market where there's a lot of activity, wrap deals, high-rise deals, podium deals. And we had in the last 18 months, one of our good clients told us, no one's ever going to develop a podium deal in Houston again, just because of where the numbers were, where rates were at the time. And he told us recently on one of our sites, I'm going to make an offer on it. And I was like, it's a podium site, right? And he's like, yeah, we can get a podium deal done now. So I think it just, I don't, like I said, I'm not saying it's going to come roaring back. I don't think we're going to see $150, $200 land prices, but I do think we'll see these urban infill sites that were maybe $150 a foot kind of sites, $170 a foot kind of sites. We'll probably see some offers in the 120 to 140 range. And then sites where maybe we were in the 80 to 100 range, there's going to be some kind of 50 to 60 a square foot pricing, maybe 70. And we've already seen that. We've had some pretty good offers on sites just in the last quarter. I don't know what you want to add to that, David, but.
Yeah, I think, overall, it's pretty similar to what you said. I think the suburban market will continue to be active. It's gotten to the point, though, where a lot of the sites have been picked over. So, going and finding a new site or manufacturing a site, however, something that you haven't seen 2 or 3 times. But I think the biggest shift is kind of what Tim said, people moving back into the inner loop areas. We had a client in our office last week who said the fundamental stories and the lack of supply story in the Houston market, in the inner loop area, it's just screaming to be done. It might not pencil and underwrite exact to the returns they need right now, but his comment was, I'm going to look up in 6-9 months and I'm going to be in there slugging it out with every other developer. Mm-hmm. So from a story and just, supply picture and fundamentals, the inner loop market is just screaming to be done, but it's just still right now with where things are, rates and cost, it's hard to underwrite them. So there's going to have to be a little bit of leap of faith on that and kind of step out and maybe underwrite something lower than what, equity's out there looking for, but it's going to get there. So I think that's going to be the biggest change is we're going to see activity pick up in the inner loop. Again, I don't think it's going to come roaring back like Tim said. I think the first 6 months of this year, it's going to, be probably a handful of groups who are willing to come and look. I think it's really kind of towards the end of this year where you might start to see the waves of groups coming back into the inner loop market. But at that point, but like Tim said, values have not changed in the inner loop market. Typically the owners of inner loop urban core land, they've owned the land for decades, if not 50 plus years. They're usually very well capitalized and they've got a long-term mindset. And they're thinking, why sell now? I could just wait a couple more years when things get back to where they were. And that's typically the mindset you get from most of the urban infill landowners.
Yeah, it's funny you bring that up about the infill. I think we're experiencing the same thing in Austin. It's one of the most incredible opportunities, very outside of downtown, very little multifamily development, and it's where everyone wants to live. But to the same point of Houston, we haven't seen the land pricing come down, but we have seen the time increase significantly. And, within a couple of submarkets, I think today deals already underwrite. And so I'm anticipating the infill to get pretty active in 25, especially in the latter half of 25. I've already received 6 or 7 phone calls from guys that are asking about very well located wrap and podium sites. And Tim, it's a funny mention that you bring up about your client you spoke with, because people were saying the same thing in Austin, saying, we're going to build podium for the next 5 years in Austin. And then, 6 months later, I'm getting phone calls from some of the same guys being like, hey, if you can get one off West 6 or, wherever it is, we can make podium work today. And it's interesting because while rents are low, the fundamentals are really strong. Lease ups have been incredible. We're seeing north of $3 rents in the lease up in the urban infill on 5-story wood frame wrap. And while the land price isn't quite there yet, David, to your point, if these guys can just have a little bit of faith, you're going to crush it. And you're delivering 27, 8, and 9 on the infill stuff. So I think prediction-wise and locations, I think suburbs have been picked over pretty well in Austin. That's where most of our supply is, that and specifically downtown. So I think we'll see really well-located suburban sites get done that are at a good basis with a heavy focus on PFC and workforce housing. Urban infill, really well-located wrap sites.
Yeah, I think sounding like a broken record, I think that Dallas has gone through something similar. It's just been hard to develop urban. The rents haven't been there and it's been too expensive. And so all the capital has been chasing these suburban low basis deals. And so really for the first time, we're starting to hear developers say the same thing. Like, I think I can get a wrap done again, and pretty much everything being built right now in Dallas in the urban market started like 3 years ago. Same thing that you guys are talking about in both of your markets. Well, I don't want to run out of time before we get to our bold predictions. I want to say real quick, I'll just hit retail high level so that we can get to our bold predictions. But I think we're seeing just a huge resurgence of retail across Texas. And it's pursuing, I'll just call David the population guy because he's quoted a lot of good population stats. But we all know that population growth and jobs, rooftops, that's what drives retail. And we had a long period of time where was just very little retail development, like big box development. I remember, when Target hadn't built a store in Texas for like 3 or 4 years. And that's really the biggest shift now is we're seeing a lot of grocery store development. We're seeing a lot of these, other junior boxes getting built. And it's really just all of these suburban areas that are just exploding with growth. You're seeing hundreds of acres of retail get developed in just different pockets because it has to get developed. There has to be services for people. So I think we're really bullish on retail. It's kind of retail is also seeing its day right now. And so we're all working on, grocery deals and mixed use deals and retail deals and had quite a few of those sales last year as well. But I think that's probably one of the strongest asset types just because of the incredible growth we've had. And there was really just a lack of services for a lot of that growth.
Well, one thing to add on retail for Houston, we just put a site under contract yesterday. This is an urban infill site where we had a retail developer go under contract on a pretty quick close at a higher pricing than the multifamily developers who were competing for that site. And so we just mentioned that multifamily has been struggling in the infill market in Houston. I mean, I don't know when the last time was that retail actually beat out multifamily on an infill site. Normally, multifamily guys pay 2 times what retail guys pay, but this is a real deal. They're moving quick, and they outbid the multifamily guys. So, to your point, it's definitely retail's day in the sun for sure.
Well, let's transition to bold predictions, and we can do this kind of quick to kind of end on this note. And I'm happy to go first for Dallas. I think this feels like a pretty bold prediction, especially just thinking about where we were 12 months ago. But what I'm seeing in the market and just the activity I'm seeing, I'm going to predict that in 2025, we're actually going to see land prices, and not just prices, we're going to see deals go under contract and deals close at early 2022 pricing levels on the industrial and multifamily side. We've obviously already seen that with single family in retail because those have been so hot this last couple of years. But multifamily industrial, we're going to see those kind of prices again.
Which is really the high watermark prices we've ever seen, right? Because I would say probably early 22 is, I don't know if the market's ever been hotter than it was at that point. So that's an incredible statement.
What about Houston? What's your guys' bold prediction?
I think for Houston is we've been kind of the ugly girl at the dance for a really long time. When you look at Dallas and Austin, Austin's been the pretty girl at the dance. But I think that Houston actually is going to be hotter than Austin this year, which is, I don't know how long that's going to last. We may get 1 year, then Austin's going to make a resurgence. But I think we've talked about the fundamentals in Houston. The fundamentals are so strong in Houston, just across the board, retail, industrial, multifamily, single family, a lot of population growth. I think there's some pent-up demand for more development in Houston. We're hearing a lot of developers that typically would shy away from Houston starting to look for Houston deals. So I think we're going to have a really kind of outperforming year as a market.
My bold prediction, I don't know how bold of a prediction this is. And since I've just been coined the population guy, I've got to throw population in there. But it's more of a statewide prediction. Texas has led the nation in population growth the last 14 years. I think we're going to hit 15 years.
It's good. I like it. And I even think that, the resurgence in Houston is probably going to be, from just an activity standpoint, from where you guys were, it's going to be the strongest in Texas. Just because Dallas has been pretty strong or relatively strong. And I think people have just kind of forgotten about Houston. And I think that's going to completely change. So,
and also, David, to add to your prediction, because you told me earlier that you think that the Texas market will be the number one job market in the country. I think we were number 2 last year, but I think you're saying number 1, which I agree with you on that.
Yeah. So number 1 in population growth, and then number 1 in job growth.
I like that. All right, Tripp, let's finish with Central Texas.
Yeah, absolutely. I'm going to switch gears a little bit on product types, but I have a couple of predictions or bold predictions I'd like to state. I think we're going to continue to see this boom in data center development. These guys have been extremely active. We've tied up more than a handful of these deals in the past 24 months in Central Texas area. The pricing is completely out of control. I think there's not going to be many that get done, but I think those guys are going to continue to be extremely active with where we're headed with tech and AI and everything, and Austin being a tech-focused market. Another one is, retail that, we briefly touched on earlier, but I think those guys are going to continue to get really aggressive. We're seeing $40+ square foot rents in the suburbs, and we're seeing, on South Congress, north of $250 a foot for retail sites, and not retail sites, sorry, retail rents. And so I think retail is going to be a leader in demand. We've had so much little development of retail over the past 3 to 5 years in Austin, and for us that was due to multifamily developers paying too much for the land, so they weren't able to build. And now there's this, we're at a max occupancy and max rents. So I think those guys are going to get really aggressive here in 2025. So I think those are my 2 big predictions. And then the other one is I think we're honestly going to see some pain that's been waiting in Austin. A lot of these people have been trying to hold on to properties, and I don't think that they can through 25. So I think there's going to be some really good land buying opportunities that hopefully we can help ourselves or ultimately our clients execute on. I think there has been so much kicking of the can down the road, and a lot of these projects won't get done. So I think we'll see deals trade hands from developers that have held on for too long, landowners that got in at the peak, didn't know what they were doing, quasi developers. So I think we're going to see some pain as we come out of this in 26 and 27. So 25, I think, will be a great buying opportunity for investors in Austin on land.
Yeah, and it sounds like on the development side, San Antonio, it's a great place to be looking in Central Texas. There's going to be a lot of activity there.
I think, boldest of predictions, single family in San Antonio will be an incredible growth year for us. The amount of demand, San Antonio is growing like a weed, and being that close to Austin, and as we continue to produce a lot more jobs, and San Antonio being the more affordable market out of Central Texas, I think single family will be really hot in 2025 in San Antonio.
Well, guys, let's go listen to this in 12 months and see how we did.
Yeah,
we made it through, so we'll have to revisit it. But I feel really good about being in 2025. Really excited about our team, our pipeline, everything we're doing. So this was fun. Thanks for taking the time today, guys, to talk through all this. It's fun to hear what you guys are seeing in your markets, how it's similar in a lot of cases, and then how it's different too. So let's go get after it.
Sounds good. That was
Thanks,
great, guys. Thank you.
Guys.
Appreciate it.
Thank you for listening to our podcast today. If you have questions about land you own in Texas, send us an email at texaslandguys@dmre.com and follow us on LinkedIn to stay updated.